It is 8:35 a.m. Pacific Daylight Time. It's the 9th day of April 2026, and this is episode 1296 of Bitcoin. And this is all the news that you can use about Bitcoin and more macro from around the world with me, your host, David Bennett, here on the Bitcoin and podcast. We're going to start with Morgan Stanley. There is some metrics that we have to go through as to their first day's performance of the Morgan Stanley Bitcoin Trust, or MSBT, spot Bitcoin ETF that opened for trading. It's the first it's the first Bitcoin ETF from a major bank. All the other ETFs are from brokerage houses or asset managers or whatever. Morgan Stanley is an actual bank. Let's not forget that. And they are the first bank to actually do this. And numbers have come in as to the performance of their first day's trading. So we're going to start the show out with that. And then we're going to go right into the quantum realm of stupid, because everybody is being stupid. And I am going to read you a little, how to say this. I'm going to try to distill down a new piece that Nick Carter has launched onto the world about quantum. He's doing it in a kind of a different way. He's doing it in a fiction piece, but he's framing the theft of Bitcoin given a quantum threat, because cracking these wallets is essentially threat. He's talking about maritime salvage law. And I'm going to admit it here. It's kind of an interesting take, because he does, while it is that I'm not a fan of Nick Carter, because I do believe that he's engaging in FUD to make money for Castle Island Ventures for various reasons, not the least of which that Castle Island Ventures is definitely invested in companies that are coming up with quantum solutions for crypto and Bitcoin. So he's definitely got a dog in that hunt. I can't just dismiss an interesting idea. It's not that I agree with him. It's just, why not? Why would you not look at the way that your enemy is thinking about something and at least let you guys know about it? So we're gonna talk about that here, and right after the Bernstein article that I'm gonna read. They're pushing back on the quantum threat fears, and then we're gonna go into the Nick Carter piece, and then just so happens that roast beef from Lightning Labs has come up, or they've come up with the first working prototype of anti-quantum tools for wallets. So that'll make us all feel better. And then there's this guy named Robert Graham. And according to him, his self-proclamation, he is a C++ developer and programmer from way back. He's got something to say about the New York Times piece about Adam Back, which I think is actually kind of interesting. And it's a different take, or it's a different spin on the exact same take that the New York Times author used when he was talking about similar language tics between Satoshi Nakamoto and Adam Back. This guy's he's using the same type of thing from a completely different lens, and he's coming up with the exact opposite argument of the author of the New York Times. I thought I'd bring that in to you. And then in the second part of the show, BitMEX and Arthur Hayes are going to be our first two stories up. And then Nunchuk releases some tools for Bitcoin agents with some boundaries. And then Visa is going to finish us up at the end of the show. But let's look at what the performance was on the Morgan Stanley Bitcoin ETF, the MSBT. Atlas 21 is writing this one. Morgan Stanley Bitcoin ETF, MSBT, raises $33.9 million on its first day. The fund tracks the CoinDesk Bitcoin benchmark 4 o'clock p.m. New York settlement rate and applies an expense ratio of 0.14%, making it the lowest cost product in its category. This price advantage, however, represents a clear distinction from competitors already present in the market. MSBT had received the green light from the SEC in the weeks leading up to its launch, following a long-awaited regulatory approval. The main strength of MSBT, however, is its distribution. Morgan Stanley's wealth management division manages several $1 trillion in client assets and operates one of the most extensive financial advisor networks in the industry, and some experts believe that MSBT could draw capital away from existing products, particularly BlackRock's iShares Bitcoin Trust. But here are the numbers that happened yesterday. The new spot Bitcoin ETF from Morgan Stanley, listed under the ticker MSBT, debuted Tuesday on the NYSE with more than 1.6 million shares traded and $33.9 million in inflows on its very first day of trading, according to the bank itself. So that's what we know so far. Again, Atlas 21 is highlighting that Morgan Stanley has a veritable army of financial advisors representing millions of retail customers, as well as trillions of dollars of assets under management for those customers. I'm sorry, but it's kind of a big deal. Now, $33.9 million of total inflows on the first day of trading. It's respectable. It's not mind-blowing, but it is respectable. And I actually think that it's a nice, healthy number, because it's not so staggering that all of our minds are blown, but it's not low either, right? It's not like, oh, it did a shitty performance. It actually performed pretty damn well, considering it's very late to the game. Very, very, very late to the game, in fact. And just that alone, and them dragging in damn near $34 million in 24 hours, actually pretty freaking impressive when you really think about it. So that's what the Morgan Stanley Bitcoin ETF did yesterday. I don't know what. It said it was open for trading on Tuesday, but it didn't trade on Tuesday. It actually didn't open. It actually didn't get its first trades until yesterday morning when the markets opened. So I don't know why everybody keeps saying that it opened for trading on Tuesday. In my opinion, it opened for trading when the first share was bought and then sold, or whatever, however you want to put that. But it sure shit didn't happen on Tuesday. Now, on to this quantum business. We might as well wrap our heads around it now so that we know what we're dealing with when we're talking to people who immediately go, oh, you're into Bitcoin, so how's it going to work out when quantum computing, et cetera, et cetera, et cetera. Might as well be prepared. So from Bitcoin Magazine, Micah Zimmerman, Bernstein pushes back on Bitcoin quantum threat fears and says it's not a crisis, according to the Bernstein report, which was released. Wall Street research firm Bernstein is pushing back on the alarm over quantum computing's threat to Bitcoin. It's framing the challenge as a scheduled protocol evolution rather than a crisis in waiting. In a note to clients on Wednesday, analysts led by Gautam Chugani acknowledged that cryptographically relevant quantum computers pose a genuine challenge to Bitcoin and the broader digital asset ecosystem, but stopped short of treating the challenge as an emergency. The team estimates Bitcoin and other crypto protocols have 3 to 5 years to implement post-quantum security measures, a window they described as sufficient given current technical and cost constraints. The note arrives in the wake of fresh research from Google, which last month published a paper showing that future quantum machines could break the elliptic curve cryptography underpinning Bitcoin's transaction signatures. Google's team estimated that the barrier could fall below 500,000 physical qubits. That is a 20x reduction compared to prior estimates. Bernstein's analysts did not dismiss Google's finding. Quote, Recent breakthroughs seem to have accelerated the timeline as the challenge is no longer a decade away as thought earlier, the analysts wrote. But at the same time, they noted that scaling from tens of logical qubits to the thousands that are required for a real attack involves breakthroughs across hardware, error correction, and manufacturing, dimensions that still remain unsolved. Quote, quantum timelines may still be more optimistic than reality, the note did caution. The firm placed particular weight on cost and scalability constraints, suggesting the transition could run into the tens to hundreds of billions of dollars. And those figures, they argued, point toward preparation time rather than panic. Let's pause right there and say, let's assume that Bernstein is right. And scaling this would cost tens to hundreds of billions of dollars. Let's say it's on the high side. Okay, $10 billion is probably like an ass scratch. Multiple hundreds of billions of dollars in this environment, this economic environment, with all the money being thrown, that's been thrown at artificial intelligence, let's really think how much might actually be left in private equity, private capital, private credit. How much how much might be left to actually develop this? And if it's not done out of the private sector, would governments be able to do that? Would there literally be the appetite we think there is, given the fact that financial markets are as frail as they've ever been? Private credit is dried up. It is a bloodbath out there. There's not that many non-banking entities that are willing to lend because they themselves, like Blue Owl, is basically saying nobody can get their money out from us anymore. We've already gotten drained by people wanting their money back from us by 40%. And we're just not really prepared to give everything back. So there's a huge curtailment on all the investors that have invested in these essentially private credit. Basically, it's like, go out and make us money. Here's $100 million to do it. And then all of a sudden that investor calls them up and says, you know what? I kind of want my money back. And they're really not getting their money back. And there seems to be some very serious issues going on in private credit, insurance, reinsurance. It smells a lot like 2007. And Michael Burry is starting to raise alarms about it himself, but that's a different story. Given this environment, if the scale of quantum is going to require hundreds of billions of dollars to actually get to a point where it can break Bitcoin and everything else for that matter, is how much appetite is there? How much appetite do you think there might be? That is a standing question that I'm going to be having going forward. Let's continue. Bernstein also identified well-capitalized institutional players. Strategy, BlackRock, and Fidelity is likely to take a constructive role in reinforcing security standards. That framing reflects the broader shift in how the Bitcoin ecosystem has evolved. Institutional ownership has given the network stakeholders with both the resources and the incentives to support defensive upgrades. Not all risks are equal. Chugani pointed to an estimated 1.7 million BTC sitting in Satoshi-era legacy wallets at the highest exposure segment. These addresses have permanently visible public keys, making them defined targets under certain attack models. For newer protocols and wallet structures, the exposure is more contained, dependent on specific unsafe practices that the developer community is working to address. The emerging consensus shared by both Bernstein and Google's own research team points towards 2029 as a target for post-quantum cryptography migration. BIP 360, which is a draft proposal already in experimental implementation, introduces transaction formats designed to reduce exposure to vulnerable cryptographic assumptions. Okay, let's go back up here. Strategy, BlackRock and Fidelity likely to take a constructive role in reinforcing security standards. Here's my question, and this goes back to the, are we really, is there going to be an appetite to spend hundreds of billions of dollars on quantum computing? Given this strategy, BlackRock, Fidelity taking a constructive role in reinforcing security standards, what do you think is cheaper to do? Build the quantum computer that can break Bitcoin, or work the problem from the other end and secure Bitcoin from quantum threat that isn't here yet? Because it's A, it's very hard to do, and B, it could be hundreds of billions of dollars to actually scale that to the point that it could do it. I'm going to throw my hat in the ring and say it's going to be a hell of a lot cheaper to work on defense rather than the offense, helping Bitcoin secure itself at the base level rather than create the howitzer, 88 millimeter or 105 millimeter howitzer cannon that's going to blow it apart. So for given that, my bet is with defense of Bitcoin being a shit ton cheaper and a lot more appetizing for people to engage in. I could be wrong, and it's okay that I am, if I am. But we got the Nick. We got the Nick Carter. Now Nick, in his infinite wisdom, decided to drop somewhere yesterday. Actually, it was yesterday. He dropped a series of, he dropped a fiction piece called $1 Trillion Salvage. And it consists of 6 chapters. I'm not going to read this to you because, I've kind of already gone through it. And there's no reason to read a long-winded fiction to you when I can just kind of summarize it here. $1 Trillion Salvage. And by the way, when he dropped that article, he dropped it as a reply to this tweet on X. Nick Carter says, "This is your heads up to become an expert in maritime salvage law before it becomes a big topic on here." And then he drops his little preview, $1 Trillion Salvage .pages.dev. That's just me being fair to Nick. If you want to go read it yourself, it's $1 Trillion Salvage .pages.dev. But if you don't want to read the whole thing, here's sort of my summation of what he's talking about. It's the cleanest read of what I can figure out $1 Trillion Salvage means. He's not really making a prediction like he has been with when that quantum is going to kill Bitcoin, or when it's going to kill Bitcoin, or who's going to be responsible for killing Bitcoin when quantum comes around. It's not that. He's already done that part. This is more he's running a scenario. It's sort of a thought experiment, if you will. It's a what happens if this goes completely sideways kind of exercise. So the setup is quantum, because that's all he's talking about right now. But it's not in the usual hand wavy, we're all going to die quantum FUD. It's a more specific fear that he is feeding us. What if somebody actually gets a machine strong enough to crack old, exposed Bitcoin public keys fast enough to actually matter? Not all Bitcoin, not your average untouched UTXO, not the old stuff, the vulnerable stuff, the ancient coins, the Satoshi era treasure chest. Carter's point is that the real fight would not just be technical. It would be political, legal, and narrative driven as hell. In his scenario, the United States government does not call it theft. Of course not. The United States government calls it salvage. That's the trick that Nick is using. The argument would go something like this. These coins are endangered. Hostile actors could seize them. The market could panic, therefore, the government must step in and, quote, recover them for safekeeping. Temporary custody, of course. Responsible stewardship, no doubt. National security at the forefront. You can already hear the press conference, man. This is what he's really talking about. He's asking whether, in a true emergency, Bitcoin's social layer would hold the line on absolute property rights, or whether the big boys, exchanges, custodians, ETF issuers, regulators, every suit with a Bloomberg terminal would decide that continuity matters more than principle. In other words, what counts as real Bitcoin if the chain splits over a quantum crisis? The chain that preserves every old claim forever, or the chain that keeps the ticker, the liquidity, the custodians, and the institutional blessing? That's pretty much what he's talking about in this article. It's not really about quantum computing at this point. It's about who gets to rewrite the legitimacy of Bitcoin when everybody's scared and the money is huge. And the salvage language is doing a lot of work here, because once you realize he's describing a possible legal fig leaf for seizure, the whole piece kind of makes a little bit more sense. And I can't believe I'm saying that, but it kind of does. That's what Nick Carter is talking about with his $1 trillion salvage piece. If you have seen it, or if you haven't seen it and you want to go look at what he's talking about, he's describing a future where the battle is not over code first. It's over who gets to define what Bitcoin is when the pressure really hits. And I can't believe I'm saying this because I'm not a fan of Nick, but he's got a point. And I am way too old, and well, I'm just way too old to completely dismiss something that I find potentially, he could potentially be right about salvage laws. Shinobi is out there he's at Bitcoin Magazine. He's out there really railing against Nick on this, and I don't blame him. But that's Shinobi. But I want to allow myself to take a breath before I start hammering Nick Carter over the head with a baseball bat or something like that, and just take a step back and look at what he's talking about. And what he's talking about is, this has nothing to do with quantum. Let's make an assumption that quantum happens and that these old coins we can go get these old coins. Who gets to salvage the coins? And the fact that he brings salvage into the entire thing means we're talking about maritime law, and that's where he's going with all of this. Honestly, I've heard a lot worse arguments. So it's something to consider, because again, Bitcoin consists, it has its feet, both of its feet, in two worlds. One is purely technical. The other is purely social. It's better than having both feet in social or both feet in technical. I can guarantee you that, but it causes other problems. This is one of the problems. Who gets to define what Bitcoin is in cases where that Bitcoin or parts of or hordes of Bitcoins could actually be quote unquote salvaged? It's an interesting argument, and I'm not putting it to bed. All right. Given all that, Roast Beef of Lightning Labs has developed a system that allows users to recover funds in the event of a defensive upgrade against quantum computers. In other words, anti-quantum tools for wallets. This is Atlas 21. Roast Beef, the chief technical officer of Lightning Labs, has unveiled the first working prototype of a tool designed to safeguard Bitcoin wallets in the event of an emergency upgrade activation against quantum computers. The announcement came on April the 8th, 2026, through a post to the Bitcoin developers mailing list. The problem the prototype aims to solve is a specific one. One of the main quantum defense proposals for Bitcoin, known as BIP360 and incorporated into the improvement proposal repository in February as a draft, includes the possibility of disabling the current digital signature system at the network level, a so-called emergency break. This drastic, very drastic measure would prevent a quantum computer from forging signatures and draining funds, but would simultaneously leave all wallets locked, particularly the Taproot wallets introduced in 2021 that rely solely on that mechanism to authorize transactions. Funds would effectively be untouchable even by their legitimate owners. Roast Beef's prototype works as an alternative exit route. Instead of proving ownership through a digital signature, the system allows the user to mathematically prove they created the wallet using the original secret seed without having to reveal it. This way, using the tool to recover a wallet does not put other wallets derived from the same seed at risk. In essence, it replaces the concept of, quote, I can sign this transaction with, I can prove this wallet belongs to me. This actually sounds pretty good. Tests on the prototype show concrete results. Running on a high-end consumer MacBook, proof generation took approximately 55 seconds, while verification completed in under 2 seconds. The resulting proof file weighs around 1.7 megabytes, comparable to a high-resolution image. Roast Beef noted that the system was developed as a side project and has not yet been optimized. At present, there is no formal proposal to integrate the tool into the Bitcoin blockchain nor any development timeline. Developers remain divided on the actual urgency of the quantum threat. Academic researchers point out that many of the so-called breakthroughs in quantum computing are based on simplified test conditions, and that a large-scale attack on Bitcoin would face difficult physical limitations to overcome. Roast Beef's prototype, nonetheless, fills a theoretical gap that long had persisted in Bitcoin's quantum threat contingency plan, offering a concrete solution to the ongoing debate on quantum computing and fund security. It's an interesting approach. I will give it that. I hope that they end up developing this to its logical conclusion. But I want to bring up yet one more time, what if this is the one place at the one time in the one world that we could think about forking Bitcoin into two forks? We've got the original one, this one, the real Bitcoin, and I would still call it the real Bitcoin. I'm not going to do Roger Ver shit. I promise, I swear to God. I'm just throwing it out there. The other fork would be the quantum fork Bitcoin, like an emergency escape hatch. And that fork is simply a complete copy, a continuous copy of the actual Bitcoin chain. What wallets have what coins in them? Because that's always on the ledger. And that ledger, the Bitcoin blockchain, is audited every 10 minutes or so, and the entire thing is done. We know what wallets have what coins, right? That's just a fact. And that's how we got stuff like Bitcoin Cash. When Bitcoin Cash forked off, we all got Bitcoin Cash if you had coins in a wallet at the time, because the Bitcoin Cash fork basically took a snapshot right before it made its first block, and whoever had coins in the wallets on their actual Bitcoin got shitty ass Bitcoin Cash coins. So the same thing would be here. The only difference with the quantum fork is that it's got whatever quantum protections the developers that wanted to, that said, hey, look, this will do it. This will completely deflect a quantum attack. Okay, fine. Have two of them. Have three forks. I don't give a shit. I at this point, I kind of don't care. If anything, this is more from the social aspect than anything else, is that if it will calm people down and get them to, again, take a step back and pause, take a breath, and get them to calm down and be able to dump some of their anxiety, I think it would actually be the one time that I would welcome a secondary or a fork of Bitcoin. I'm not calling for it. I'm just saying, what if? And let's say the worst thing possible that could happen does happen. We've got two forks. We've got the actual Bitcoin fork and we've got the quantum resistant fork. It's always a complete copy all the way up into the time Nick Carter gets to go to his quantum church and pray to God, thank you for destroying actual Bitcoin, because quantum is here. And the very first thing it did, instead of anything else, instead of completely destroying the web or getting nuclear launch codes or taking everybody's money by cracking all their bank accounts, it decided to go right for Bitcoin first, and it completely destroyed that chain and all the value there. Well, but it can't destroy the quantum chain because they did it right. That's a huge assumption. And you've still got your coins on that chain. The drawback here is that until one of these chains is destroyed by quantum, and if that is a big if in the first place, it's going to be it will be an argument in the markets as to which one has value. People will be selling the real Bitcoin for quantum Bitcoin. They'll be selling quantum Bitcoin for real Bitcoin. It'll be a mess. And that part I don't even like at all. But I'm just saying, what if this is the one time we're having a fork of Bitcoin ready to go just in case? Might make sense. God, I can't believe I'm saying that. I almost feel dirty, which is why I'm thankful that I'm friends with Soap Miner. Go to soapminer.com. That's soapminer.com. Get yourself some handmade 100% grass-fed beef tallow soap. He's got the best soap in the business. And my favorite so far is cedarwood, followed by Earl Grey. Those are my top two favorite soaps that Soap Miner makes. And he makes soap the old-fashioned way. His main three ingredients is 100% beef tallow, distilled water, and lye. That's it, man. You can even get that with his bar that's called Rough Cut Tallow. It only has those three ingredients. There's no scents, there's no color, there's no colored sand, there's no nothing. And even if you get any of the other stuff, it's all 100% high-quality ingredients. He's not going to use some kind of weird peppermint oil for his peppermint soap. He's going to source, and he does, highest quality peppermint oil to use as a scent for his peppermint soap. And it's that same way with all of his soap. His soap lasts freaking forever. I got a family of 4. One of his bars of soap lasts me a full month at the bathroom sink. Do that with Irish Spring. And if you do try to do that with Irish Spring, just think of the word paraben. Yeah, you don't really want this kind of crap. Make sure you use the code Bitcoin and so that you will get a, what is it? Is it 10% or is it 5%? I'm looking now. 10% off your total purchase. Use Bitcoin and at soapminer.com. That's soapminer.com. Use the code Bitcoin and get 10% off. You're going to love anything that you buy. And you will be buying it in Bitcoin, because if you're not selling it in Bitcoin, you're not in the Circle P. It's where I bring plebs just like you with goods and services to plebs just like you who want to buy those goods and services. Soapminer.com. That's soapminer.com. Use code Bitcoin. And Robert Graham, this guy posted on X. I know I should, I still use X, but I love Nostr. When I go to X, I get an anxiety attack. When I'm on Nostr, everything is calm, cool, and collected. I get a lot of information from Nostr. I get a lot of information from X. One is easier to stomach than the other one, but this one came up on X. This guy's name is Robert Graham, and he's got something to say about the New York Times piece on Adam Back. And he says this: Hi, professional C++ programmer here. The open source code I can find written by Adam Back and Satoshi Nakamoto don't look remotely similar. Adam Back's code looks typical of academic Unix programmers who also hack their code to run on Windows. Satoshi code was written by a professional Windows programmer who also wrote for Unix. Stylistically, they look nothing alike. There's not enough time between 2005, when I can find the newest Adam Back, in January 2009, when Satoshi published Bitcoin version 0.1 to account for the change. Both are perfectly competent programmers, but stylistically, they're completely different. The New York Times tried to compare their English language in posts and emails. I'm comparing their C, C++ language in their open source code. The New York Times merely points out that they both use C++, as if it's another corroborating detail, but the actual code itself seems to disqualify Adam Back. Okay, first of all, who's this Robert Graham guy? Okay, he's got 67.8 thousand followers on Twitter. He says in his bio, created Black Ice, IPS, sidejacking, and mass scan. He's doing a blog, code, cyber rights, internet scanning, and macro data refiner. And he's got a Substack. So I go over to a Substack, and he's written a lot. In fact, the very first time he wrote to this blog was back in October of 2021. So he's 5 years in. And here, stuff like this is his headlines. Hackers don't talk to police. Pennsylvania's unconstitutional vote by mail law. Let's see here. What's his more recent stuff? Those are like really old. More IPv4 address parsing. Experts versus Wi-Fi privacy versus VPNs. The nihilistic cybersecurity certification exam. He seems to have the chops, but this is all I can really find on whether or not we should believe what he says about, well, what he just said, right? But I find it amazing that he's like, well, let's not look at their English language. Let's look at what they wrote in code. And if Robert Graham is right, and so I hope somebody can corroborate this. It'd be interesting to see if at least one other person can say, yeah, and here's why it looks this way. You know, here's why Satoshi code was written by a professional Windows programmer versus Back's code that looks like typical of an academic Unix programmer. Because if that is true, I'm not really certain that you can fake that. Because programming code is a lot different than writing a sentence like the quick brown fox jumped over the fence, right? The programming is a different world. I think Robert Graham may actually have a better take on this entire thing than the author of the New York Times piece that for whatever reason still wants to find out who the hell Satoshi Nakamoto is. I find the entire thing rather bizarre, but whatever. We got news from the Fed. They did their meeting yesterday, or their press conference yesterday, and the Fed rate cut odds have improved after the ceasefire, but they remain unlikely. That's really all we need to know as we go into the numbers. But I saw this other headline earlier, either this morning or late last night, and it said the Fed signaled that there's more of a chance of a rate raise or a rate hike rather than them not doing anything, which doesn't make any sense to me. Because if they have a 50% chance of cutting the Federal Reserve rate and a 50% chance of hiking the Federal Reserve rate, wouldn't that actually cancel out and say they're not going to do a damn thing? Which is exactly what I told you earlier this week. The Fed is not going to raise nor lower at this next meeting. They're going to keep, unless something geopolitically fundamental changes. Because right now, this whole Hormuz ceasefire, Iran, Israel, Lebanon, United States thing looks pretty freaking shaky to me. I don't think this is going to last. As you'll see, we're already seeing oil creep back up, and the markets don't seem to be lying lately. But I do not think the Fed is going to raise or lower rates. So let's run the numbers. CNBC Futures and Commodities. Remember what I was just saying about something happening that would cause, like some market fluctuations? Something happened with oil just now over since I've been talking for the first part of the show. It was oil, like West Texas Intermediate was up to, like, I don't know. Let me look, because this actually ends up being rather important. It was up to 95 bucks an hour ago, and now it's at 91, and it's dropping. So, and it's pretty good. It's a pretty good set of two red candles to the downside all of a sudden. So I don't know, but I have a sneaky suspicion that something happened with an agreement to make sure that the Hormuz Strait is passing ships, because it's been closed after Israel decided that they wanted to bitch slap Lebanon last night, but maybe the strait reopened and we've got proof. Who knows? But right now, energy markets are mixed. Brent North Sea is up 0.8%, 95.53. West Texas Intermediate is up almost, 3.6% to 97.89. Natural gas is down 2.5 to $2.65 per thousand cubic feet. Gasoline down 0.17 to $3 a gallon, and Murban crude is up 2.8% to just over $100. Gold is up almost a full point to 48.21. Platinum is up 2.9%. Silver is up 1.29% to 76.36. Copper is down 0.18, and palladium is down 1.59%. Almost all ag is in the red except for cotton, which is our winner today, 1.72% to the upside. Biggest move to the downside is lumber, 1.6% in the red. Live cattle moving sideways, lean hogs up a third, feeder cattle up 0.25%. The S&P is up 0.6%, NASDAQ is up 0.6%, Dow is up 0.5 point, and the S&P mini is up 0.25%. And Bitcoin making a little bit of a rally on West Texas Intermediate, losing some of its price. $72,340. That's a $1.45 trillion market cap. 15.1 ounces of our favorite shiny metal rock may be had with our one Bitcoin, of which there are 20,013,385 and 1/2 of. Average fees per block are regular, 0.02 BTC, taken in fees on a per block basis. About 32 blocks carrying 31,000 unconfirmed transactions waiting to clear at high priorities of 1 sat per VByte. Low priority is going to get you in at 0.1, and hash rate has risen to 961 exahashes per second. That's more than enough security on the Bitcoin network for me. From Resident Evil, yesterday's episode of Bitcoin And, I got Paul Sir9 with 500 sats says, thanks, my friend. No, thank you, pal. Jason High with 250 says, boost. Permanerd with 210 says, hi. Nick Dose with 187 says, cheers. Cheers right back at you. And Noster Gang with 101 sats says, absolutely nothing, and that's the weather report. Welcome to part 2 of the news that you can use, where BitMEX co-founder Ben Dello reveals a $5.4 million donation to Nigel Farage's Reform UK party. Callan Quinn from Decrypt.co. BitMEX co-founder Ben Dello has revealed that he donated $5.4 million to Nigel Farage's Reform UK party, saying he was motivated to become politically active for the very first time by what he described as a failing UK political system. Dello, who is based in Hong Kong, wrote in a Daily Telegraph op-ed that he made the contribution earlier this year before the introduction of the £100,000 cap on donations from British citizens living abroad. He said that the funding would help build reform into a genuine alternative party of government. So, getting in under the wire. That's really all I wanted to tell you about that one. But yeah, he is a British citizen, but he lives in Hong Kong, and he gave a shit ton of money to Nigel Farage. So we'll have to see what Mr. Farage does with all that money. Although I'll tell you this, it's going to really throw fuel on the fire for all the UK politicians who want to stop crypto donations altogether. And here's why. Well, here's one of the reasons in its little tinfoil hattery. They are I mean, not only are they doing the 100,000 pound sterling cap for British citizens living abroad as a donation, but they really want to stop all political donations via cryptocurrency. And then if you start looking behind the scenes at Nigel Farage's Reform UK Party, they are heavily crypto centric. They like Bitcoin. They like cryptocurrency. They advise people to donate to their party in cryptocurrency. And all of a sudden now you start to go, oh, that's why the rest of the UK politicians want to end all kinds of donations made available by cryptocurrency. It's really more about stifling the Reform Party's funding spigot rather than whether or not they care about who's getting Bitcoin. Just be aware. Arthur Hayes calls Iran's bluff. And I'm with Arthur on this one. Show me the Bitcoin, or it's just IRGC theater. And this is out of Being Crypto. BitMEX co-founder Arthur Hayes publicly challenged the reports that Iran is collecting Bitcoin tolls from oil tankers transiting the Strait of Hormuz. His skepticism echoes a growing chorus of crypto voices questioning whether Tehran's crypto toll demands have any on-chain substance behind them. The controversy stems from a report on Bitcoin tolls at the Strait of Hormuz. According to Hamid Hosseini, spokesperson for Iran's Oil, Gas, and Petrochemical Products Exporters Union, laden tankers must email cargo details to Iranian authorities. They then receive a toll assessment of roughly $1 per barrel of oil on board. Payments must be made in cryptocurrency or Chinese yuan. Bitcoin was explicitly cited as an accepted option. Fully loaded supertankers could face fees of up to $2 million, roughly 281 Bitcoin at recent prices. The payment window is reportedly just seconds long, designed to make funds difficult to trace or seize under Western sanctions. I got to come back to that one because this one is really bugging me. The Islamic Revolutionary Guard Corps enforces compliance with non-compliant vessels risking denial of passage. Now, Arthur Hayes responded on X with a pointed challenge, quote, I will believe Iran is charging a toll in Bitcoin when I see a transaction linked to a vessel's toll payment. Otherwise, it's just IRGC trolling the Western filthy fiat financial system, end quote. Western filthy fiat financial system. Wow. Despite a 2-week U.S.-Iran ceasefire, shipping data still shows minimal tanker traffic, according to reports citing intelligence from Kepler. No oil or gas tankers have passed through since the ceasefire actually took effect. Hundreds of vessels remain waiting, and the waterway that normally handles 135 ships per day remains largely restricted. Earlier, Bloomberg reporting indicated some vessels had paid tolls in yuan or stablecoins like Tether for IRGC escorted passage before the ceasefire. However, no BTC specific payments have been verified on chain. Other renowned accounts amplify the skepticism, citing geopolitical shitposting as the reason the story transcends BTC only to any crypto or yuan within minutes. Meanwhile, a Mossad-linked commentary account raised an additional wrinkle. It claimed Iran listed the Trump-linked USD1 token as an accepted payment method, framing the move as a potential geopolitical provocation. So we still don't know. I the guy that said Bitcoin is from the Iranian Union of essentially petrochemical oil exporters. It's not like he doesn't have a lot of weight to throw around. He does, yet he's not part of the government technically. I'm sure that they're in bed together, whatever, I don't care, but from a technical standpoint, he's not really part of the Iranian government. He's the head, he's the union spokesperson, and he's the one that used the word Bitcoin. Now, he actually did use the word Bitcoin, but he's the union guy. He's not an Iranian government guy. He's not an IRGC guy. He's not a Supreme Ayatollah guy. We don't know. And yet I've been a little embarrassed today by activities both on Nostr and on Twitter where it is just this complete fanboy stuff that Iran finally got their shit together and understood that finances are important, and therefore that's why they're taking Bitcoin for payment. I'm with Arthur on this one. Until I see actual proof that I can wrap my head around that, yes, somebody paid a toll in Bitcoin to Iran for oil tankerage to go through the Strait of Hormuz, I'm not buying any of this shit. Hell, nobody even knows if this fucking strait is open or not. I get conflicting reports all the time. Hell, even NPR on the radio yesterday, there was one of their news guys was actually just really confused and actually had to ask another guy that they had on the phone. And he asked a specific question. You're over there. Can you tell me whether or not the Strait of Hormuz is open or closed? And the guy essentially said the following, and I love this. It's hard to tell. I really don't know. But this is a great day. This ceasefire is great. This is an awesome, great day for Iran. We've won, whatever. The people are happy. And I'm like, how is that even coming close to answering any kind of question? And how do we not know whether or not the Strait of Hormuz is open or not? Why is this even a question? How can there be conflicting reports? Do you have a pair of binoculars? Do you have a telescope? We have literally no way to look down on ships from orbit? Bullshit. Bullshit, 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 bullshit. Somebody somewhere knows whether or not the Strait of Hormuz is moving traffic through or not. And if they are, at what rate? I completely discount any news story at this point that says, well, there's just no way to know. Oh, bullshit. Of course there's a way to know. We're just being kept confused on purpose, I believe. But Nunchuk has released open source tools for Bitcoin agents with bounded authority. Bitcoin Magazine's Micah Zimmerman. Nunchuk has released not one, but two open source repositories aimed at reshaping how artificial intelligence agents interact with Bitcoin wallets, introducing a model that limits agent control while preserving human oversight. The release includes Nunchuk CLI, command line interface for managing Bitcoin wallets, and a companion agent skills repository designed to help AI systems operate the CLI across common workflows. Both tools are licensed under MIT and target developers building automated financial systems on Bitcoin, according to Nunchuk. The core premise challenges a growing trend in AI wallet design. Rather than granting agents full control over the funds with basic safeguards, Nunchuk proposes a shared custody model where agents operate within strict policy limits. Human users retain final authority over transactions that exceed predefined thresholds. Under this structure, wallets are configured as group wallets with multiple keys. A user key, an agent key, and a policy cosigner work together to authorize transaction. The agent can initiate actions such as creating wallets and inviting participants and constructing transactions, but that spending authority remains constrained by rules set at the policy level. These policies define limits such as daily spending caps, approval requirements, and signing delays. Transactions that fall within allowed parameters are allowed to proceed without intervention, while larger or more sensitive actions require explicit user approval. Nunchuk separates custody from automation. The wallet structure governs ownership and control of funds, while policy layers define what an agent can execute. This distinction ensures that funding a wallet does not grant broader authority to the agent managing it. The CLI supports a range of functions, including key generation, wallet creation, transaction workflows, and policy configuration. It also allows users to export wallet descriptors and backups using standard formats, which supports portability and recovery outside the Nunchuk ecosystem. A little escape hatch there for you. The agent skills repository serves as an interface layer for AI systems. It's the one that provides predefined commands and prompts that guide agents through tasks such as setting up wallets, managing participants, and executing transactions. This reduces the need for custom integrations and lowers the barrier for developers experimenting with Bitcoin-based automation. Nunchuk positions the dual repository approach as a response to two distinct challenges: execution and usability. The CLI acts as the execution layer that's tied to the Nunchuk API, while the skills layer focuses on just how AI systems interact with that infrastructure. It'll be interesting to see. That's the end of the article. It's going to be interesting to see how this stuff really rolls out, because at this point it's almost as if I just had this notion that I could build let's say it's not even a Bitcoin wallet. Let's say I'm building something completely outside of Bitcoin, like I don't know, a digital audio workstation that's interface is just, for whatever reason, is so complicated, and I've got so much stuff jammed in there as to what you can do, that maybe what I should do is also provide an agent skills repository for my application, so that the user who's never seen the interface before and looks like they're going to be bewildered beyond belief upon executing, and opening that application up, can simply just, talk to the agent skill stuff and say, all I really want to do is be able to record 5 tracks of guitar and put a drum track on there. How do I even get to the mixer? Because this looks like it's a Beats track thingy looking thing, and that way the AI agent can go, oh yeah, I can help you do that shit. Honestly, that would be a really interesting user interface, because I've got a couple of packages where I use maybe 2% of what's possible with that thing, because honestly, that's all I need. And trying to figure out all the rest of this stuff takes a long time. But what if each one of these applications comes with an agent skill set that is basically like, not only is it your tutor, and like video games, there's always like a tutorial at the first. And some tutorials are really good and some tutorials are really bad, but there's always generally a couple of screens where you're like, how to crouch, how to run, how to walk, how to move to the left and right, and how to shoot your gun, shit like that. What if we had the same kind of thing that was actually an artificial intelligence agent with a set of skills that not only acts as a tutor and knows where everything is on this application that you just opened, but can actually execute some of that shit for you through you interacting it with natural language? Like, I don't know what I'm looking at, Mr. AI. I just want to lay down 5 guitar tracks, a bass line, and I want a Roland 808 at least on one track as a drum machine. It's like, oh yeah, I can set that up for you. Or we'll do this. We'll get your tracks down, and we're going to put do the compression like this, and blah 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 blah. Give me a tone from your guitar, so that we can do levels. Holy shit, that's like having an engineer, and that's just on a digital audio workstation. Anyway, it's just something that I've been thinking about. Visa is going to round out the show. They've unveiled commerce platform that enables autonomous AI shopping. So Visa, artificial intelligence, and online shopping. What could possibly go wrong? And this is out of MSN, by the way. Credit card giant Visa has ventured further into the agentic AI payments race, announcing a new platform Wednesday to help businesses participate in AI-driven commerce. In a statement on Wednesday, Visa described Intelligent Commerce Connect as a network protocol and token vault agnostic on-ramp to agentic commerce for AI agent builders and merchants. The system serves as a universal platform for agentic AI payments, which means AI agents acting for consumers can browse, select, and pay for goods. Quote, through a single integration via the Visa acceptance platform, Intelligent Commerce Connect enables secure payment initiation, tokenization, spend controls, and authentication. Let's pause and look at the word tokenization. They just slipped that in there. This is for retail. This is for this is for basically general commerce that wants to allow general retail that is going to more and more adopt AI agentic stuff to be able to shop on their platforms. And here's Visa using the word tokenization. It's a brave new world. I just hope it doesn't suck. Crypto networks such as Shitcoin number 1, Shitcoin number 2, and Shitcoin number 3, as well as fintech firms, have been positioning themselves as a way for AI agents to make online payments on behalf of consumers. The company said that Intelligent Commerce Connect supports both Visa and non-Visa card payments and is compatible with all major AI agent protocols. Yeah, we'll see. I think it's a little early to be able for us to get comfortable saying that this is going to be just fine. This is going to work just fine. And it's a little disheartening that this is one of the only news stories I've ever read that actually did nothing but spout the names of shitcoins and did not actually mention Bitcoin. So take that with a grain of salt. We'll see. We'll see if Visa can pull it off. My bet is on somebody else, but it is what it is. All right, so we're at 62 minutes and 5 seconds. I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.